Morning, everybody. It is January 17th. January 17th, 8:25 a.m. Hope everybody had a good weekend. 3-day weekend of trading, break from trading. Um, so let's get into it, right? First, let's just check out a watch list. I know I'm gonna really quickly go over this. VIX VIX is up 9%. Wow. That's pretty significant. Bitcoin's up 9%. That's significant, right? 10-year yield is up. Okay. Crude is up. Dollar's down. ES is down 0.22. Russell down 0.27. Dow down 0.31. And Q down 0.38. Okay. People are selling bonds. All right. Well, what just happened was Goldman Sachs missed their revenue, and the stock is down 2.46%. Morgan Stanley also supposed to report. Now they're up right now 1.79%. So I don't know if they, let's see here, Goldman. I don't know if they, let's see, earnings. They 1.24 estimate actual. Okay, so Morgan Stanley did better than Goldman Sachs. All right, so that's the story there. Obviously, let's just talk about some leaders. We got some coins up 4.34 with Bitcoin. We have Tesla up 2.53, and Morgan Stanley, right? Laggard is Microsoft. That's the laggard to note. All right. Who's leading in top sectors? Disney up 1%. Now let's see here. Disney. I don't see any news yet. Um, and the laggard is Goldman Sachs, like I just spoke about. So I'm gonna assume. Let's see here. That's not much of a leader. Discretionary sector. Is there much of a laggard? Not really. Technology, not really. 0.41. Um, what do we have on tap for news? That's not the news I wanted to show you. Give me 1 second. Alrighty. So today we have OPEC, which just reported some things for oil. We have New York Empire State Manufacturing Index, and it says 11 minutes. Let me refresh this. 11 minutes. 2 minutes. Okay. Let's go back to this week. We have Fed member Williams speaking. We have a bunch of Fed speaking this week. We have core PPI tomorrow. Right. That should be important. All right. Core retail sales. Thursday we have initial jobless claims, Philly Fed, crude inventories, and we have more Fed speak. Friday, more Fed speak, and existing home sales, and more Fed speak. So some Fed speak this week, which let's see how hawkish they are or dovish they are in their speeches, right? So earnings season starting, so that's another thing to talk about. And what I'm going to start with is just a general overview of where we're at in the market, and I'm going to bring us to this chart. All right, and for anybody who hasn't been following, just a real quick, I like looking at this. Okay, quick overview. This is a volume profile. The heat map profile, which is this one, that shows a year ago from today. That's a volume. It's a rolling year profile. Okay. The white is this year. That white profile is this year's profile. Okay. Every blue profile here is each week. Okay. And every white outline profile is every month. So I can look at every month, every week, and then every candle is a 4-hour candle. Okay, so let's look at the ES. Okay, prices are at 4,009. It's right here. Okay, so let's just look at this. It's very important to look at. So what do we have here? We have a higher low in the week, higher low, right? Each week has had a higher low, right? This month's lows here, we have a higher low in a monthly as well. Okay, this right here is the monthly VWAP. We're over that. Now, the real interesting point is that the most traded price of a year to date and the most traded price of this year are equal. So this is the line in the sand for the ES. Okay, this level right here, which is 39995. Okay, this area right here is the line in the sand. Okay, if we stay above this, we should probably make a move higher. Okay, where are we gonna go, right? So I think we can go one of two places. Okay, I think the first stop would be here to this low volume node right here. That's gonna act as probably a resistance area, or it could slice through it, but you can see there's clear resistance right here and right here. All right, and that level is around, I would say, the area of like 4130. Okay, that could be the first stop. It could also blow through it. And then where's the next stop? Well, next stop would be here, this high volume node here. Okay, we could go right here. Okay, that's if we hold this level. Right, just to give you some perspective, when you know, this is kind of like a zoomed out look. All right, and that level is 4186. 4186. Okay, now that's almost last month's, that is pretty much last month's high. Okay, you can see right here, that's the high, and that's the high that month. Okay, so that's where I think, and there's a lot of volume in the past there, so that should slow down the market. This low volume node, it could either act as a rejection point, or we slice right through it and go right to this spot. Okay, so we got 4130 and then 4185. 41, around 4180s. Okay, that's what I'm seeing, right? So this level of 38, 30, let's see, 39.89, 39.95, like right in this area is just our line in the sand. You hold it, we might like it can get a bump higher. Okay, we go below it, you know, we start coming underneath this and can't break it, then we can get a straight shot and we can start going to these lows again. Okay, and remember, we still haven't been able to break that 200-day moving average, so that's what I'm looking at in the overall market, right? Let's look at the Nasdaq. Nasdaq's a little different story. Okay, so in the Nasdaq, we're also holding this year's most traded price, which is here. Okay, this hot pink line, that's the most traded price of the year, right? But the most traded price of the rolling year is here at 117.15. Okay, so we're in these this big volume should slow the market down. Okay, so if the Nasdaq comes here, I don't expect it to just cut through this. It should probably get slowed down. So then what does that mean, right? The ES is probably going to slow down with it. So it's very tricky, I think, because we're in between these big nodes here in the Nasdaq. But the same thing goes for the Nasdaq, okay? Because if we can't hold and get above this level, and we start to crack this level, okay, there's a bunch of weak lows down here, and you can see it even in the profile, this big shelf. It's because of these lows. You got three You got four, and you probably can't even see this one that I'm pointing to, but you can. There's a monthly low here, a monthly low here, and a monthly low here. If this gets revisited and we crack it, we're making new lows. Okay. I could even maybe lift this up a little bit to give you guys more, you know, just to show you again. Low, monthly low, monthly low. That low is, woof. There's not much going to hold that from going. You can see there's no even volume here. So this could be making fresh lows if we do go lower. Okay. All right. I just wanted to show you guys that chart, give you some perspective on the market. Thought that's a good chart. Now there is one other thing I wanted to show. Okay. Now here's the SPY, of course. Now SPY, what do we have? We have the trend line. That's still it's hitting that trend line again. 200-day moving average, right? So, obviously you can break that trend. Maybe we go here, right? Okay, there's a lot of things I want to show you guys pushed back today, just to see all the stuff I'm looking at. So I just showed you those high volume nodes. Now we got the 200-day moving average. We got this trend line, right? And then of course my anchor VWAPs from the highs and from the lows. So the purple is from the all-time highs. Look at the resistance here, and resistance here. Okay, then you have them from the lows in October. Okay, now we're above the anchor VWAP from the lows. So we're in between these VWAPs. Okay, will this act as a resistance again? That's about 407 in the SPY. Very important to see. Okay, we can look at the Qs really quickly. And the Qs, I have anchored VWAPs as well. So let me load that up. So that's the anchor VWAP at 309 from the all-time highs, and we have the anchor VWAP from the lows here. Okay, as well as battle on the 100-day moving average. Okay, now the last chart I want to show you guys is what is the VIX curve. All right, hit you with a lot this morning, but it's very important to look at these. Okay, now the VIX curve, okay, shows where people are hedged in the market. You can tell positioning of hedging. Okay, the only thing I care about really showing you guys is, let's go to a larger time frame here. We go to, let's see this. All right, maybe I can just show you a daily. Let me see. Okay, so this is a daily of the VIX curve. Okay, the only thing that really matters, okay, is this determines complacency in the market. Okay, and it determines fear. Okay, and this blue line here measures the 9-day VIX versus the 30-day VIX. Okay, and this one measures the 9-day VIX versus a year out, the red. Okay, so you can see in the market, we'll look at it together. Whenever this red is down here, that means it's complacent, also with the blue. So you can see the blue support level and you can see the red support level. Okay, whenever they're both at those supports, that means the market's complacent. That means usually the market's going higher. Okay, so let's look at that together. Now let's look up here. When this dips down, look what the market does. Goes up. Okay, goes up. Now, when this inverts, when the red goes above the blue, okay, That means that shorter term options are more expensive than longer term options, and that's ultimate fear. Usually, what happens when you have inverts, I'm sorry, it causes full fear. We should drop. So, what happens, right? As this started to come up, the market started to drop, kept dropping, kept dropping, kept dropping, right? Kept dropping. Let's go to the next move down, right? It inverted again. Look at that. This inversion marked this bottom, right? Now look what happens as it goes down. It reverts. The market starts to turn up. Okay, so that's how that VIX curve works. Look at the so anytime you see this support here, here, here. Now look where we are now. We're here. We're at the start of these supports. Okay? Doesn't mean we shoot up now and we get selling. Okay, it doesn't mean that. But it does mean that we're about to just hit this bottom and see the blue is the short-term VIX, right? That has hit the support. Okay, so we could do this, like to say the red, we could do this and then start to move up. We're probably going to take a leg lower. Same with this. We can do this and then start to move up until we invert again and there's all fear in the market, and then we got to go up again. Okay, so this is just something I like to look at because you can see where hedging is right now. There's not a lot, right? So when everybody's complacent, that means no one's really, there's not fear in the market. That's when fear starts, right? When everybody is complacent and they think the market's going to go higher, it starts to invert, hedging starts to happen, and what will happen is if we do this and we go and then we start to invert, then we probably roll over. So something I like to look at. Hitting you with a lot today. All right. Now that I showed you guys that, let's go back to oop, let's go back to the indexes. All right. Everybody knows where we're positioned now. And let's just look at that TNX because that's very interesting. The TNX shot up, right? Look at that gap up. I don't know if that has to do with, now remember, this is the smart money, so I don't know if that has to do with the financials. I don't know, but this is not a good sign. Okay, and two, the VIX. I mean, the VIX is gapped up. Okay, interesting. And I believe I saw the dollar. Dollar still at the lows. Okay, that's good for commodities and equities. All right, so let's move out of this. Let's move out of this. Okay, so let's look at what's going on in the market. Oh man, did I really not have that up on the screen? I apologize for that. I apologize for that. I just realized I think I didn't have that up on the screen correctly. Probably didn't see all those drawings. I apologize for that. That's because I got out of my routine. I'm very sorry for that. Well, that sucks. All right, well, let's go into the market profile. I'm very sorry for that. That's just me being not doing my routine. Um, so just like I said earlier about those key levels, there they are. Okay, we're at 409. As long as we stay above here, even if we crack below it and stay above it, we should go higher. Okay, so I don't really care about this little session here. This is the high and the low I care about. So we're inside that. There's really not a lot to glean from this as long as we stay above this. That's not much to talk about. Okay. We did move the most traded price of the week higher, which is bullish. Okay, and we're above the most traded price of the year. So, and if we don't break that, we're probably moving higher. Okay, so let's look at the Nasdaq. Nasdaq, we're in the same scenario. We need to stay above this here. Okay, but again, the high of and low Friday. Actually, that's not the high and low Friday. This is. So we're inside that. So again, stay above it. We should go higher. Okay, we fall below it. We could go lower. I'll be watching closely. I mean, today's first hour trade, I'm not sure if people still took off or something like that. It might be a little weird, but we have to see. We have to see. All right. Let's go to the hourly charts and actually show you guys the charts instead of not showing you the charts. And just to see what I'm looking at on an hourly thing here. Now there definitely is a trend lines that are being honored here. So we got this downtrend line still being honored. It's broken a little bit. 200-day moving average here. But we do have a nice uptrend line here that's being held. So have to see, okay? Obviously we're gonna break. That's why I said this level is so important, because it's pretty much hold it. We're probably going higher. Break it. We can go lower. Okay. And like, come to think of it, I don't really need to show you the market profile as much today, because that's really it. Okay, this area is the line in the sand. Hold it. You probably want to go long. Break it and hold it. We're probably going down here to like 39.57. You can see this trend line's been holding. Okay, so have to see. Also, this 4001 support level's been holding. So it all goes together. Support these levels, right? You break it, probably can go down lower. Come down, hold it, probably go higher. Okay. Sorry for the. Let me just actually do this right. So even if we come up, come back down, hold the support level, and hold the level below most traded price of the year, we're probably going to go higher into this supply zone at least. Break these highs. As far as the lows, this support, if we break it, we need to break these levels. Okay, and we hold underneath, we're going to go down here to this supply zone, at least to 39.57. This is also the 50-day moving average. Okay, that's what I see in the ES. And let's go to the Nasdaq. So in the Nasdaq, Nasdaq doesn't have the same exact setup. I actually favor the ES better, but you can see the Nasdaq also has this trend line that's been 4 times it's been held. Okay, and it actually has a top wedge that's been being held here. Okay, so same thing here. You have this support at 115.15. You know, if you break trend, right, but you hold this, because this is also the 50 moving average, and we just hold it, you know, we're probably going to take a leg higher up to at least 116.35. Okay. Now this trend line is very key, so let's just say we break this trend line in the 50 moving average. Okay, but we have the most traded price of the year down here. Okay, I wouldn't say short it yet, but if we break below this, you know, and hold it, we could take a leg lower, maybe to 112.90. really have to see. Really, right now, like, those are the things I'm gonna look at. And of course, there's earnings, the bank earnings. Like, we have to see what happens. But that's really what I'm looking at. I don't have a high conviction of anything right now. I'm just gonna let the market guide me to what I'm gonna do. All right. Only thing I'll do really quickly, because I have some time. I can show you guys that VIX curve really quickly again, because I think that's something that it's pretty cool to see. Now that I can show you with you, I know you guys are going to see it. I apologize for that before, because I don't think you guys saw it. Just really quickly, here's the light blue line. Okay, that's short-term VIX. That's the 9-day versus the 30-day. Okay, just shows the spread. All right, between those two. Okay, when it's, you know, negative, that means the way it's supposed to be. The 9-day VIX should never be more expensive than the 30-day VIX. Okay, same thing with this red. That's the 9-day VIX versus the year out VIX. Okay, when they're negative, that means that's when there's no fear. You know, a 9-day VIX should never be more expensive than a year out VIX, right? But that does happen when the red line crosses the blue line, and that usually calls for market bottoms. Okay, and then down here you see the red support here, once, twice, three times. We're here again. Okay, usually that calls for market tops. All right, same with the blue. You can see the support line here. That's where we're at. That support line's been very key, and we're there now. Okay, so that means there's not really fear in this market right now, which makes sense why we're moving up, right? So if you just follow when we invert and when we revert. Okay, so let's look at this area here. We had fear, and then look, once we come down, look what the market does. It goes higher, and then look here. What happens? As soon as we start to come and invert, the market drops. It drops, right? And then look what happens here. We're inverted here. This shows a bottom. Red above the blue shows a bottom, right? And then what happens? This reverts. As we move and we revert, people aren't as fearful. The market starts to rise, and see, it rises. As long as we stay complacent down here, the market rises. There's no fear, right? So just back in here, see this, we started to invert, didn't get quite an inversion, but see, it fell down, and now look, right? We're moving up again, and then look, we're coming back down, which is causing us to go higher, and we're coming back down to support level. So just quick, this can do this for, we don't know how long, but once we start to do this, and this starts to do this, that's when we can start maybe seeing the next leg lower. Okay, so it's a good tool to look at to see where people are hedged, where they're positioned. Okay, it's a little tricky because you don't know how long it will invert, and you don't know how long it will stay complacent. You don't know how long. You kind of want to wait for it to show you a little bit. But I just wanted to show that. Hopefully that cleared up. If anybody has any questions, please let me know. It's just a cool tool to look at. I look at it pretty much daily just to see where hedging is at in the market. So that will be it for me today. And give me a comment, like, or subscribe. I'm sorry before about not showing my monitor. I kind of like went off of my routine. I apologize for that. Maybe a little rusty. And I wish everybody green today. All right, I'm going to be waiting patiently on this market. That's not the easiest thing to do, but my plan is for today. And we'll see everybody tomorrow.